Hey guys, hope you are doing well. So the BlackRock just released a 9-page report that why Bitcoin is a unique diversifier. And also Larry Fink goes into the CNBC and marketing Bitcoin. So guys, amazing time to be in crypto. So let's get into it. My name is Mike Denkler from CorionX and from the CryptoMinds Global movement. So let's see what's happening. Let's check our favorite bubble charts on the CryptoMinds Global. So we see that many altcoins are pumping like Celestia, Lido Finance, ICP, Arweave, YFI, Conflux, Hex, NIRB, so almost all the altcoins in green, Immutable X and Phantom Beam correcting, but they did really well last week. The fear and greed index in the neutral zone at 54, and it's getting better because in the past 2 weeks it was in the fear zone. Bitcoin rainbow chart shows that Bitcoin is just about to leave this buy zone and heading to the upside, and also after the halving it's finishing up its accumulation period. So let's go to my Twitter feed. Definitely make a Twitter or X account, x.com account for you, and follow MIKLOS Denkler, and also follow CorionX platform and Laser Pangats. So here is this. BlackRock is marketing Bitcoin massively. CEO Larry Fink says, I believe Bitcoin is legitimate financial instrument. There is a role for Bitcoin in portfolios. So guys, let's listen this. Okay.
I believe Bitcoin is legitimate. I'm not trying to say there's not misuses like everything else, but it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. I believe it is an instrument that you invest in when you're more frightened, though. It is an instrument when you believe that countries are debasing their currency, debasing their currency by excess deficits, and some countries are. I believe we have countries where you're frightened of your everyday existence, and if you have an opportunity to invest in something that is outside your country's control, then you can have more financial control. And so I'm a major believer that there is a role for Bitcoin in portfolios.
So he said that I am a major believer that Bitcoin, there is a role for Bitcoin in portfolios. And last week, BlackRock just put out a 9-page white paper that makes cases for the Bitcoin ETF as a unique diversifier that can hedge against fiscal, monetary, and geopolitical risks, also including section called Bitcoin's Path to 1 trillion market cap. So also this was shared by Eric Balkunas, the ETF expert at Bloomberg. And let's dive into this report. So this is the report. You find the link here in my tweet. So Bitcoin, a unique diversifier. Why Bitcoin's appeal to investors lies in its detachment from traditional risk and return drivers. From BlackRock, there is a forward authors, free expert that adding to this key points. Investors considering allocating to Bitcoin are grappling with how to analyze its relative to traditional financial assets given Bitcoin's unique properties and limited history. So yes, this is a special asset and we need analyze with special tools and viewpoints. Second, Bitcoin, with its high volatility, it's obviously a risky asset on a standalone basis. However, most of the risk and potential return drivers Bitcoin faces are fundamentally different from traditional risky assets, making it unfitting for most traditional finance frameworks, including the risk on versus the risk off framework employed by some macro commentators. So Bitcoin sometimes is risk off, sometimes is risk on. It's depending on the situation. So Bitcoin's nature as a scarce, non-sovereign, decentralized global asset has caused some investors to consider it as a flight to safety option. So flight to safety or risk off. In times of fear and around certain geopolitically disruptive events. For over the long term, Bitcoin's adoption trajectory is likely to be driven by the intensify of concerns over global monetary stability, geopolitical stability, US fiscal sustainability, and US political stability. This is the inverse of the relationship that is generally attributed to traditional risk assets with respect to such forces. So this is an inverse of a risk on, but a risk off, because it's totally different. So, introduction. Is Bitcoin is a risk on or risk off assets? That's one of the most relevant questions our clients ask us as they consider investing in Bitcoin for the first time. The answer, we believe, is that Bitcoin's unique nature makes it unsuitable for this and most other traditional finance frameworks, and that Bitcoin long-term return drives are fundamentally uncorrelated with other sources of portfolio return. So uncorrelated with other assets. So this is the main takeaway. Why Bitcoin has been volatile and has seen short episodes of co-movements with equities, and Bitcoin's long-term correlation to equities and bonds has been low. Its long-term historical returns have been vastly higher than all major asset classes. So this is the main point, that the return is vastly higher than the most major asset classes. Over extended time horizons, we believe Bitcoin's adoption drivers are likely to be distinct from, and in some cases inverted with, the global macro factors that drive most traditional financial assets. In this paper, we seek to explain this dynamic. So guys, let me know in the comment section, how do you enjoy so far? So let's go forward. Why Bitcoin matters? First, Bitcoin is just 15 years old, so it's a teenager. But Bitcoin's hard-coded supply cap at 21 million units means it cannot be easily debased. So it cannot be debased. Second, its global digitally native nature means it can be transported anywhere in the world at near real time at zero cost, transcending the frictions long inherent in moving value across political borders. So moving value across the globe. Third, its decentralized, permissionless nature made it the world's first truly open access monetary system. So guys, these are really important. So first, inflation debasement, fixed maximum supply of 21 million units with supply growth declining every 4 years. Difficult to transact across borders, so this is the persistent historical challenges around money. But Bitcoin, digitally native and borderless, permitting near instantaneous global transfers of value. And third, access limited to one's particular country controlled by central authority, and Bitcoin first truly open access global monetary system. And let's go forward. Bitcoin's path to 1 trillion in market capitalization. So Bitcoin market cap is around 1 billion when we speak. So Bitcoin outperformed all major asset classes in 7 out of the last 10 years, leading it to an extraordinary returns in excess of a 100% annualized over the last decade. This performance was achieved despite Bitcoin also being the worst performing asset in the other 3 of those 10 years, with 4 drawdowns in excess of 50%. Okay, So Bitcoin price continued to reflect its part in evolving prospect through the time of becoming adopted on a widespread basis. So Bitcoin's long-term performance, you see, Bitcoin has this cycle. This is influenced by halvings, and now after the bear market and a consolidation, Bitcoin price is increasing. Cumulative returns is really huge, guys. Even I cannot say this, but 807,000 times, and total length 170 months. As uncorrelated assets, so Bitcoin has exhibited low historical correlation with US equities with period of dislocation, but Bitcoin correlating somehow with gold and also catching up with gold. So in fact, the Bitcoin, an asset that trades 24 per x7 and settles to cash near instantaneously, making it a highly saleable asset during periods of stressed liquidity in traditional markets, particularly over weekends. So Bitcoin is traded all over the clock, and you can sell it and trade it over the weekends. A function of the still immature nature of Bitcoin and crypto asset markets and of investors' understanding around Bitcoin. So S&P 500 gold and Bitcoin through major geopolitical events. So guys, good to realize that what's happening with the price after 10 days followed by the events, and after 60 days follow the events, what are the returns? The US iron escalation. After 10 days, Bitcoin up 12%. After 60 days, 20%. COVID outbreak. All major markets are down. Bitcoin is down 25%. After 60 days, all major markets are just slightly up 3%, but Bitcoin up 21%. US election challenges in 2020. Bitcoin up 19% and then up 131%. And guys, this is important because next month or just couple of months, in November, US election will happen again, and we can expect such a huge returns with Bitcoin. Russia invasion in Ukraine. Bitcoin down -6%. After 60 days, Bitcoin up 15%. US regional banking crisis. So banking crisis, guys. S&P 500 down -10% after 10 days. Bitcoin up 25%. And after followed by 60 days, Bitcoin up 32%. So guys, I see that Bitcoin made a best performance when this US regional banking crisis happened in 2023 March. Yen carry trade unwinding, and actually Bitcoin was after 10 days just almost at the same levels. So accelerating US debt growth. So guys, this is an important chart. This yellow mountains, or I don't know what is this debt flood coming down. So this is how the US debt is increasing. And guys, just look at in 2020 or in 2000, it was below 5 trillion and now more than 40 trillion. So it's increasing really fast. US deficit or surplus. So we see that it's more likely deficit and no surplus. And also that was a great recession in 2008 and in COVID pandemic. Bitcoin is still a risky asset, but let's come to the conclusion. Why Bitcoin has shown instance of short-term co-movements with equities and other risk assets, over the longer term, its fundamental drivers are starkly different and in many cases inverted versus most traditional investment assets. As the global investment community grapples with rising geopolitical tensions, concerns over the state of the US debt and deficits, and increased political instability around the world, Bitcoin may be seen as an increasingly unique diversifier against some of these fiscal, monetary, and geopolitical risk factors investors may face elsewhere in the portfolios. So guys, and they are not talking about other countries, they are talking the US debt deficit and also US geopolitical problems. So guys, check this report, and this BlackRock is the biggest and the most, they are managing the most amount of wealth, almost 10 trillion US dollar wealth they are managing. So guys, if they think that Bitcoin is something that we should pay attention and we should use as diversifiers, guys, they will go with the financial advisors. I think they have several 10,000 financial advisors, and these financial advisors will sell the Bitcoin ETFs and Ethereum ETFs, and then also providing some services to investors. So next interesting news that is somehow correlated to this news, that Bhutan is a small country, not even in the top 100 countries in the world, but they are now the fourth largest holder of BTC out of all governments. New narratives rises nation-state Bitcoin adoption as a monetary asset. So guys, we will check this in the next video. So hope you enjoyed, hope you learned something, and see you soon in the next video. Smash those like and goodbye. Bye bye.